Good morning, everyone. Isn't it great when you can have an event on July the 5th and you have someone appearing live on July the 4th at the same time? We didn't used to be able to do those things back in the day. We're running a little bit late already, so I'm going to run through this relatively quickly. But ONFIF now for 10 years has been doing an annual survey of central bank reserve managers. We're very proud in the way that they share some very, very sensitive information with us that allows us to produce the aggregate findings that we're going to share with you today. A lot of it touched on already by the conversation that John had with Eddie just now. I think it's fair to say that our findings show that there aren't many reserve managers as diversified and proactive as HKMA, but we'll have a little look through it now. And these are some of the things we'll talk about on the following panel. So just to let you know, so we had 75 responses from central bank reserve managers this year. They have a total of 4.9 trillion in international reserve assets. And we also analysed publicly available information on 171 central banks around the world. It's a very global sample. We have more than 15 responses from Asian central banks, for example. So this is not skewed to any particular region. Just a brief look at the evolution of FX reserves globally. And you can see, Eddie alluded to 2022 being a bloodbath. You can see it was a pretty bad year for reserve managers as well. You can see mostly rising, but recently falling. We'll look at those losses. And you can certainly see that Asia Pacific remains by far the largest proportion of global FX reserves, more than half. So we've been asking for a number of years now, what are your biggest concerns to reserve managers? Inflation, as you can see, remains a very big concern. But there are some changes. The economic slowdown or a potential economic slowdown is becoming an increasing concern. Rising policy rates, we didn't even ask about that last year. It didn't seem like it was even on the agenda. That has become a big concern. In the shorter term, geopolitical tensions are going down, and we're seeing less concern, of course, about things like QT and the like. Over the longer term, though, geopolitical tensions are the biggest single concern if you factor in the three most challenging things that the reserve managers face. Interesting to see where inflation is as well. And I think really interesting to see where climate change is. And a lot of our discussions today will focus on climate change, ESG, sustainability. And we'll have a look in a second about what central bank reserve managers are doing in that space. On to our next slide, the losses in 2022. You can see here that 80% of reserve managers lost money or saw their reserves fall in 2022 in those difficult markets. And you can see that actually for a lot of them, it's going to take some time to recover those losses. So you can see there that the high proportion, it will take 1 to 2 years to recover those losses. The vast majority think it will take 1 to 5 years to recover those losses. These are conservative normally managers, with the honourable exception of HKMA. They would be heavy investors in bonds usually. They're even more so now in these difficult markets. Obviously, last year, the rising yields and falling bond prices hit their mark-to-market losses. Now they're getting some yield, which they might not have been getting before. So government bonds rising both in Asia and in the rest of the world. Quasi-government bonds, inflation-linked bonds are certainly of interest to Asia Pacific reserve managers. Where are the discrepancies between Asia and the rest of the world? On cash, Asian reserve managers moving more into cash. You see the rest of the world moving strongly out of cash. And on equities, where Asian central bank reserve managers are moving out of equities, whereas the rest of the world is actually accumulating some more equities into their portfolios. So we ask each year, and we have been now for 3 years, what are your views on the rise or the role of the RMB? So here's an interesting thing. This is a slide in 2 parts. So for the first time since we started asking this question, the thought that the RMB is going to become more important reserves is actually falling in the next 12 to 24 months. So it's only around 13% of the reserve managers are saying they are planning to increase their allocations to RMB over the next 12 to 24 months. Whereas in previous years, when we've done this question, it's been more around the 30% plus level. However, over the longer term, very interesting to see here over the next 10 years, the number of reserve managers expecting to increase their allocations to RMB. Also of interest to us at ONFID for sure is the expected more allocation to the euro. That's partly a result of the fact that euro government bonds are yielding something, they're getting a return from them, and a decline of the US dollar over the next 10 years. And we'll look at just how big that decline might be in a second. We asked the reserve managers what encourages them to invest more in China and what discourages them. Encouraging that diversification play, the importance of the renminbi in the global trade and economy, and higher returns. Discouraging factors, market transparency, geopolitics, and regulatory environment. Nothing surprising there, but interesting to confirm a lot of views that we have on these markets. Just wanted to show you the longer term trend lines here. Big gap between US dollars and RMB. But there's no doubt there's a trend there. RMB is rising. We think it's going to get to the 5 to 6% range in global reserves in the mid 2030s or in the early 2030s. And the dollar is declining. It's still going to be around the 53, 54% level. But, you know, a 5% shift in what is $15 trillion of reserve assets globally is quite a big shift for the market. We always ask them about the role of external managers. Some use them a lot, some don't. And what you can certainly see here is it's to learn. External managers to learn, to have knowledge transfer, to access complex asset classes, and also in terms of diversification as well. But that's an important role that external managers play. On ESG, we just mentioned that. Where are FX reserve managers investing in ESG? Europe is very much ahead of the rest of the world on this. Asia does pretty well compared to some regions, but it's certainly lagging behind. So you can see that only around 30% of Asian central banks have bought green bonds, just under 20% have bought social bonds, and these are about half the levels of what their European counterparts in central banking are doing at the moment. So room for improvement there, maybe from Asia, central banks on investing in sustainable products, and obviously a big focus of Asia at the moment, that whole transition finance question. Just a quick one to strain your eyes a little bit. Here's just a list of the top 10 central bank reserve managers in Asia. You can see it was a difficult year for many. It was a difficult year for HKMA, down 11%. Monetary Authority of Singapore down 18%. Most central banks in Asia experiencing some losses or reduction in reserve assets over the course of 2022. And just a quick conclusion before we move on to our next panel. We can certainly see reserve managers are challenged with losses, stagflation, and geopolitics. These are the presenting issues for them right now. APAC central banks are certainly favoring safer assets, government bonds, and gold. And the allocation to the RMB will rise, but the shift will be small and gradual. There's an awful lot more in that report that we do and in the survey. You can download it from our website. The report's called Global Public Investor. We welcome all of you to go ahead and download that. There's a lot of data in there that we think you'll find useful. So thank you for listening to the presentation. It sets up our next discussion nicely. So can I invite to join me on